Good evening, ladies and gentlemen, and a very warm welcome. Today, we're in the presence of some of the topmost minds in the Indian banking space.
Digital lending has allowed millions of Indians access to credit at the touch of a button.
The technical prowess of talent that we have as a country, and of course, a large underserved market. So it really made sense to create a platform to bring thoughts together from India, for India, to drive this forward.
At the very heart of using technology is not just about transforming lending, it is about people. The true power of using technology is in how it changes lives and drive the progress for our country.
Good evening, ladies and gentlemen, and a very warm welcome. I'm Karunya Rao. I will be your host for this evening. And thank you all for taking time out and joining us today for this event. Just to set the tone for the evening, the agenda for the evening, I have a few facts and figures to start with. Of course, the adoption of technology is rapidly changing how we access credit now, and it has only expanded the reach of lenders to the most remotest corners of the country. In fact, there's an EY report which they released with Digital Lenders Association of India, which says that digital lending disbursements stood at about 21.6 trillion rupees in FY22, which is expected to more than double to 47.4 trillion by FY26. Now, this growth represents immense opportunities and, of course, some challenges, including the growth of unregistered lending apps and the need for responsible practices. Now, for the rest of the evening today, we'll explore this theme in more detail. Today, we're in the presence of some of the topmost minds in the Indian banking space who will share their experiences in digital lending. Following that, we'll be unveiling Mint's latest publication, produced in partnership with Lentra, which is, as you all can see, titled State of Credit, an anthology of perspectives of banking industry leaders on the tech-led disruption of lending. So, without much ado, let's start the day's proceedings with an opening note by Shayan Ghosh. He's a seasoned journalist and a known name in the BFSI circles. He's the editor for BFSI for Mint and brings about 14 years of rich experience of tracking news in the banking, economy, and financial services space.
A very good evening, everyone. Thank you for joining us today as we launch the coffee table book curated by Mint in partnership with Lentra. The book, an anthology of 14 articles from industry thought leaders, many of whom are present here, alongside interesting data sets, presents a picture of the digital lending landscape today and its future. RBI defines digital lending as a remote and automated lending process, largely by use of seamless digital technologies for customer acquisition, credit assessment, loan approval, disbursement, recovery, and associated customer service. Digital lending has allowed millions of Indians access to credit at the touch of a button. Banks and non-banks are today competing on who can give quicker credit, with many giving personal loans in just minutes. The numbers are also staggering, as Karunya mentioned. Digital lending disbursements are expected to reach 47.4 trillion by March 2026, according to an industry report. There are worries too. Regulated lenders play by the RBI rulebook, but digital lenders hiding behind nondescript mobile apps access the borrower's private information for strong-arm recovery tactics. These unregulated participants, along with the risk of cyber fraud, are some of the key concerns around proliferation of digital lending.
Now, I'd like to call upon Rajesh Kumar. He's the CMO at Lentra, to give us a welcome note as well. Rajesh comes with years of experience in marketing for global MNCs and startups across Asia and is known for his passion for developing world-class B2B brands from India for the world. Rajesh, come on up.
Well, thank you so much for such a flattering introduction. So we are delighted to have everyone here. So really welcome to the evening. Special thanks to our chief guest, all our columnists who contributed their time to do the pieces, and all of our panelists. So thank you so much for making the time and being with us here today. India clearly has been leading the pace in digitization of lending and in fact all of the financial services on the back of digital public infrastructure that India has created, the technical prowess of talent that we have as a country, and of course, a large underserved market. So it really made sense when we worked with the Mint editorial team to create a platform to bring thoughts together from India for India to drive this forward.
Next up, I'd like to call upon our chief guest for the evening, Mr. Sunil Mehta, the chairman of board, IndusInd Bank, to share his insight. Mr. Mehta is a veteran in the BFSI space with more than 4 decades of leadership experience in the banking, financial services, insurance, and investment industries. We are privileged to have you with us today, sir. Please come on up and give us your address as well.
I go back to my role as on the board of State Bank of India. Akash Lal was there, a much younger Akash at that point of time, supporting SBI. And at the board came a proposition of the Jan Dhan accounts. And they were asked by the government of India to start opening those Jan Dhan accounts at a rapid pace. The task was daunting. We didn't even know as to who's going to bear the cost of those opening of those accounts. It was a leap of faith that was reposed in the entire system, and SBI took the lead, but all the other public sector banks rallied behind. And I think at the first big go, it was, if I remember correctly, about 150 to 200 million accounts. And then, of course, now it's gone up to about 500 million accounts, Akash. Is that fair to say? But I think this was a transformational moment for India's inclusive growth and using technology far more effectively. And that has sort of benefited the entire banking system. Technology has become an enabler. But that mindset change has actually been able to put technology into our processes and systems and also deal with the risks in our banking system to see as to how we can deliver products which will be much more effective and efficient and improving the efficiency in the banking system. There's been so much of conversation about the entire aspect of how our payment system has changed. I think it's a credit to the whole aspect of technology. And this reminds me of one interesting example of using of technology far more effectively and getting fintechs involved with the banks. 2015 or 16, we had a board meeting of State Bank of India when I was in the board at the Infosys campus in Bangalore. And after that, Nandan Nilinkani, and Sharad Sharma, who were running iSpirit, had organized a meeting of the board in Bangalore at the Infosys campus, and they had a full one-day meeting with young entrepreneurs, fintech entrepreneurs who presented their solutions or made presentations hoping that SBI would kind of use some of those. And here we were all in our wonderful neckties and suits, and these guys came in their sneakers and jeans and t-shirts, and some of them even in slippers. So there was one interesting proposition that was made by a youngster, and the CIO of the bank said, we have floated an RFP, why don't you go through the RFP process, and then you can come to Bombay whenever you've gone through the process, and we'll select whatever we can do. And you know what that young man's response to the entire board was? With due respect, I don't have the resources or the time to go through your process. If you're willing to, if you like it, please accept it. I'll fly to Bombay once I've got the confirmation. That was a game changer. It actually taught us that the young fintech players who are coming up with the right solutions are not willing to go through the bureaucracy or the maze. They need to get instant responses, and they need to sort of then support you in what you're delivering. After that, there was a sea change with the way the buying behavior of SBI. and they made it possible for these young fintechs. So the role of fintechs in the way we have changed the use of technology, I think credit to the youngsters who have come up with these solutions and who have actually made the difference. And it's not just the big suppliers of technology, but it's also the young entrepreneurs who have provided that easy solutions for the banks and the financial services industry to adopt. Data, artificial intelligence, and machine learning holds immense potential to revolutionize the way credit happens to the country. And that's obviously going to have impact on MSME lending, financial inclusion, embedded finance, and of course, product innovation. With all of this, obviously, there is a huge amount of risks as the new technology is adopted. And we are seeing this as a proliferation of new risks. Fraud risks was spoken about, identity thefts, forgery, wishing, phishing, etc., are also increasing at the same time. So while we have the technological products, I think it's also extremely imperative that we build a regulatory architecture that enables and takes care of the use or the misuse of AI or any other technological change. I think the aspect that is now, it's not just what we'll see in the financial system because it's all interconnected, in the banking system because the entire financial system is interconnected. So there is a huge amount of fragmentation in the way the regulatory system works, and there is a need to break those silos and bringing a much more unified regulatory architecture that will support the growth of technology and take care of what in this case are the known unknown risks. And we know that in some of these technologies, there are some risks that we need to sort of take care of. It's encouraging to see the whole aspect of data privacy issues that are being looked at by the Digital Personal Data Protection Act, and that's a step in the right direction. There's a lot of stuff that from a lending perspective where we need to increase the credit to GDP ratio. We're still amongst the lowest in our comparable countries, so we need to get that increase. US is at 190%, China is at 160%. So obviously there's a long way to go. And technology is going to be a big enabler for that. As I conclude, because I'm certainly overshooting my time, so at the end, at the very heart of using technology and the real impact of technology is not just about transforming lending or an industry about transforming lives. While we talk about algorithms, data, and technology, at its heart, it is about people. It is about the small business owner who keeps his or her shop running owing to access to a microloan, the student who gets an education loan to finish his or her higher education, to get a job and improve the quality of his or her family's life. A farmer who can plant his crops on time as he gets access to credit. The true power of using technology is in how it changes lives. So everything that we do of imbibing the new technological revolution is really have a power to create such opportunities and drive the progress for our country.
We're moving towards the next and the core event of tonight. Our panel discussion on digitizing lending, pushing new frontiers in customer experience. And I'm delighted to introduce 4 exceptional panelists for this discussion. All of them are senior experts in the BFSI sector. Please join me in welcoming Mr. Harsh Duggar, Executive Director of Federal Bank. He joined the bank in 2016 and has worked in several capacities since then, including country head for corporate and institutional banking and country head for wholesale banking. Please come on stage. Next up is Mr. Akash Lal, Senior Partner with McKinsey & Company, who leads their corporate and investment banking practice in Asia. He has management degrees from IMA and INSEAD and almost 20 years of experience in the financial services sector. Our third panelist, Mr. Ramesh Narayanaswamy, Chief Technology Officer at Aditya Birla Capital. He is a technology leader with a passion for executing transformational projects that can create value across industry verticals. And our fourth panelist, Mr. D. Venkatesh, founder and CEO at Lentra. DV comes with over 3 decades of proven track record as a successful business leader in technology organizations focused on security and high availability. He founded Lentra in 2019 and has since then helped establish Lentra as a trusted technology solution provider to leading banks and financial institutions. So glad that all of you could join us today and take time out for this discussion on stage. I'll leave the floor on to all of you all.
So, hello everyone. Hello once again. We have with us on stage 4 sector experts, and the topic of discussion is around newer frontiers of customer experience in digital lending.
Shayan, if you look at the evolution of digital lending, I would split that into the traditional financial institutions which have digitized a lot of lending and the newer generation fintechs, etc., or digital natives, you would call it. I think on the first segment, it's extremely clear that from the ability to provide credit to their customer base and also get new customers, there's been a sea change in terms of the speed of response. So there are, Mr. Mehta talked about, now it taking 2 to 3 minutes. There are institutions which are offering 10-second loans clearly. And, their ability to do that across the country has really gone up. Today, the cost of processing an unsecured loan has gone down by almost 65%. And even a secured loan has gone down by almost 45-50%. So there's been a significant improvement for the lenders. On the borrower side, even if you take into account that these are all credit-worthy borrowers or credit-tested borrowers, the convenience has been unparalleled. Today, you can easily take a loan through your mobile app, through your internet banking, and you don't really have to go through any of the processes, which historically you would have had to need to go to the branch. I think if you look at the other segment, which is the fintechs and others, what is interesting is the ability of leveraging digital to expand the customer base to hitherto unserved segments. Okay. So if you look at the new to credit segment, for instance, the fintechs and some of the other digital lenders, the percentage of new to credit customers is almost 2x that of the traditional players, right? And using digital, using the availability of data, which is now much more available, your ability to underwrite and reach out to a much broader segment, which historically would not have been credit tested or served, that has increased significantly. Of course, it has created some mishaps along the way as well, as we are aware, and that's part of the reason why the RBI has clamped down on unsecured lending. But it has helped in expansion of credit, both to new segments as well as to new geographies. So for instance, today, the most distributed product in this country is actually consumer lending. 70% of current account balances are in 17 districts of the country. 70% of personal loan balances are in 285 districts of the country. That's the extent of difference. And really, you couldn't have got there without digital being a large part. So yes, it has benefited both lenders as well as borrowers. We need to be cognizant of the risks.
We launched something called an instant Kisan credit card. So what we did was, it's completely new to the customer. We walk in, it's assisted form of lending. We do his biometric eKYC. We fetch his land records by APIs. And we check the credit bureaus, not his score necessarily, but he should not have had defaulted. Along with a few parameters, goes to the business rule engine, gets approved or rejected. Documentation done digitally, signed electronically, and funds credit to his account in a matter of less than 4.5 minutes. So this is something which you develop over a period of time, which has hugely benefited that segment of the society.
The fact that there are so many kinds of messages a customer gets, are we taking consent for granted? And once this DPDP Act comes into play, would it actually hurt banks because you'll have to take consent at multiple levels? This is a question that all of you could answer. So we'll start with DV and then.
On a moment you borrow, you are indebted to the bank. I don't think the DPDP says that you shouldn't spam me. If I owe you, you have every right to tell me that I owe you, and you meaning the bank. So I think that's built in. I'm not a legal expert. I'm a technology solution provider, but I would believe that the bank has full rights to send you messages that you owe money.
I think consent is going to play a role when you're trying to sell the second product, right?
Yeah.
Because in the first product, if I've already given, don't have a choice. It will play a role, right? Because as I always say, right? We always say we'll create a great customer experience by lending. But for a customer, when he borrows money, it is actually a very pathetic experience because he does not. It's a very difficult experience. You go and take money because you've got something. So I think we need to be mindful. I know people, a lot of organizations play around in the gray area of saying that, look, let me try. I hope that Act has that necessary checks and balances, which does not allow people to do, because you do an act and then if you're not going to implement it, then it is going to be very tough. And you'll also see how legal framework are going to be there, right? See, today that's the biggest challenge, whether it is customer communication AR, because our laws are still for the physical world. The digital world laws are very, very weak. So we'll have to see how all those things pan out. But I think customer consent would be the key. Otherwise, the spirit of the act goes down drastically, in my view.
Do you think that lending per se could become completely digital and not just personal loans? If you could talk about wholesale loans, are there any cases where lending can be done with minimal human intervention?
Digital lending in some forms, like what we see in personal loans, is end-to-end digital and can be done. But in certain categories, you will require, in some cases, a human intervention. If you look at microfinance, it requires compulsorily group training or financial literacy training. So some part of it will remain physical in certain segments. And in some ways, I think it's also sometimes desirable to have one human touch as well. While end-to-end digital makes it more convenient, seamless and everything, but sometimes we miss out on the bigger pieces where frauds happen. And a large part, I do feel, a human intervention, the human touch helps, including if you want to do a cross-sell, know your customer better. So those kind of things come into place when a human intervention is definitely there. Now, can that over the years be also, through machine learning and AI and all those things, be taken to different level? Possibly, yes. But at this point of time, I do think we are still some time away from a complete end-to-end, apart from one or two categories of loans which we do.
Is there a gap in between what the banks and other lenders want to do with AI and some of the newer technologies? And is there a reluctance from the regulator to allow those? Because you're dealing with public money. That's what the regulatory line is. So is there a gap between what you want to do and what is allowed?
See, the gap is the public policy, right? Because once you get the policy, then the gap gets bridged, right? But that is very difficult, right? Because what happens in the government or the politics or the parliament itself, see, people are learning a lot because they don't know how to do. And bear in mind, the governments have never controlled technology directly, right? It is always through the end user you control technology. So I think policies will be developed. I think there are already a lot of notes getting shared between the governments, and then there are tremendous amount of interest in this, and tremendous amount of information has been generated in the last, I would say, 24 to 36 months, in all countries. Now they're trying to say, how do I slowly take it into the technological realm and then come up with some kind of a framework? And then, as I said, this also means that the corresponding laws needs to change.
So that brings us to the end of this discussion. Thank you, panelists, for joining us today. Thank you for taking the time out.
Thank you.
Thank you, gentlemen, for this enlightening discussion. And now, finally, for the special moment that we all have been waiting for, the formal cover launch of our coffee table book. This publication is a testament to the transformative power of technology in the world of credit. I'd like to invite all our columnists one by one who've shared their insights in the book and made it possible. Let me give a brief introduction of them as we set up the stage for the big launch as well. First up, of course, Mr. Sunil Mehta. Once again, we'd like to have you on stage with us. Mr. Rahul Shukla, Group Head, Commercial and Rural Banking at HDFC Bank. An IIT IIM alumnus, Mr. Shukla has led several businesses for major banks like Citibank, HDFC, and Salomon Brothers in his experience that has lasted for over 3 decades. His anecdotal column uses several case studies to tell us about the impact of digital lending, which has enhanced not just connectivity, but also access to financial services. Next up is Mr. Arjun Chaudhary, Group Executive Affluent Banking, NRI Cards and Payments at Axis Bank. Mr. Chaudhary has spent more than 30 years in the banking space with experience across business management, operations, marketing, and product management. He delves into how digital lending is leveraging advanced technologies, evolving borrowing patterns, and progressive government policies to create a dynamic and fast-growing market, which is transforming the BFSI sector. Next up, we have Shalini Warrior, Executive Director, Federal Bank. Ms. Warrior has spent a decade with Federal Bank, which she joined as the COO in 2015. She deliberates on the convergence of digital platforms, artificial intelligence, and application programming interface, or as we call it, API, and how this has disrupted traditional lending models, making credit more accessible, personalized, and efficient. She also talks about Federal Bank's initiatives in this journey. Ms. Chandmani here is representing Mr. Rajan Pendle, who couldn't join us right now on stage. And Vijendra Sharma is here in place of Mr. Mandal. Next up is Ankur Handa, co-founder and president Lentra, who's been in technology and product leadership roles over the past 25 years. With deep domain experience in cards and lending, Ankur has been part of global technology transformation at HSBC, GE, Barclays, and Citibank. He's been passionate about reimagining lending with time and thus laid the blueprint for cloud-native API-first lending transformation journey. And finally, we have Kiran More, COO Lentra. They've been leading technology space for around 25 years. And he was also the founding CIO of Highmark Credit Bureau. Mr. Ritesh Mehta is here in place of Ratan Kesh, Executive Director and COO at Bandhan Bank. For the big unveil, let me also call upon D. Venkatesh, founder and CEO at Lentra, whom of course I have already introduced in the panel, and Hitesh Sahejwala, EVP Sales Lentra. We have Susanna Muthoot, ED, Muthoot FinCorp joining us in place of Mr. Thomas John Muthoot, who could not join.